Alright, ICT beginners, welcome back to the channel. In today's video, we're going to do something different, a bit advanced, not the beginner basics, because we've finished with everything in the beginner level. So if you're new here, this is basically a YouTube channel dedicated for ICT beginners. You want to come over here to go to the playlist to get everything in the sequence as it was arranged earlier. So it is dedicated for those who are starting out with ICT concepts. So make sure you come over here, start with the ICT core basics. We're dealing with intermediate ICT videos right here, and then we'll talk about the advanced level. So today's video is about entry, and this is the first type of entry you need to know as a beginner so you can get the best out of the ICT knowledge I'm about to share with you. Look at this. Now, everything I'm going to show you is basically what I've taught you before about ICT concept. It is the simplest entry model. It is called institutional swing points, and that's basically using the ICT breaker block and the ICT mitigation block for entry. Now, we want to focus on the swing points in the sense that we want to see price turn direction after moving in a certain direction. So let's say price is moving bullish, for instance, and price doesn't go bullish forever, right? We need to see a point where price completely shifts structure, just like you can see right here, coming back, and then we see price moving in another direction again. So we want to take advantage of this knowledge and have an entry. It is called institutional swing point. So looking at this, price has been coming from here up to this level. Then we have a shifting structure right at this point. This is the shifting market structure. So anytime we see shifting market structure as price is moving in a particular direction, we want to take advantage of that kind of movement and then get an entry somewhere around here. All right. That's looking for either a breaker block or a mitigation block to take an entry as soon as we see a market structure shift in the market. That's basically a simple entry strategy. Intermediate ICT knowledge is what you're learning right now. All right. So price is coming to this point, having this shift. Likewise, this we can do in the opposite direction. If price is going bearish, all right, you can see price coming like this, having this kind of movement, and then we take advantage of this kind of price action where we see a shift in market structure and then price returning to locate a specific institutional reference point right here. It can be a breaker block, it can be a mitigation block, whichever one, institutional swing points. All right, and then there's something I want to tell you. You have to understand the power of your time frame. All right, I want you to pay attention to 4-hour time frame and your 1-hour time frame in this regard. I don't want you to go further than this. Just the 4-hour time frame and the 1-hour time frame. Strictly, you're going to be trading within this time frame. Don't go lower than this, because the more you go lower, the more the chart looks more noisy, and it will help you to avoid getting confused. As you learn further, you're going to learn a lot of things while you watch this YouTube channel. All right. So we have an example right here. I always like to give an example. As price is coming down, you can actually see price has been coming down, having a break of structure at every point. We see this is a shifting market structure, and price is coming. We are having a break of structure right at this point. This is it. Price is coming. We're having a break of structure again at this point. Price is coming, and then this at this point. We have sweep of liquidity, price trading into this all-time bullish order block. And then we have shifted structure at this point. Let me show you. We have shifted structure at this point. As price was coming down, this is a shift in market structure. So this is the kind of entry you want to be looking for, market structure shift right there. So price was coming down. You just watch your trade, and this is the 1-hour time frame. As price is behaving, immediately you see this shift in market structure, you locate your institutional swing point. And what does this look like? This is your breaker block, because price have pushed below, grabbing liquidity right here, trading into an all-time bullish order block. I don't want you to get confused with this, because everything is working in accordance. We are not leaving anything behind. Everything will be captured in our ICT knowledge. So Just be watching everything I'm showing you right here. As price took out this, your breaker block is something like this. Don't forget, having a movement like this, the right hand side is actually lower than the left hand side. Always lower than the left hand side. So this is a classical example of a breaker block. And then the last bullish candlestick that push up here is where price wants to come back to before pushing up again. All right, I think this is explanatory enough. You can get this quite easy because I've taught this in the beginning of everything we've been doing. So once we see this happen, we are going to get an entry, and that is institutional swing points. Price coming, and we saw this shifting structure. What do? We just carefully, all right, we just carefully look for that breaker block, and this is your breaker block in this regard. The last bullish candle that price printed before coming down, that is your breaker block as price was coming into this area. So we are going to take our trade from that breaker block. It's as simple as that, guys. You can use the tip, and then your stop loss is basically somewhere below the left hand side of your chart. So, and you're going to target the opposing liquidity always. Liquidity starts from the body right here. Let me show you where liquidity starts from here. From the body up to the above the wick, even outside there, that's where the buy side liquidity can be located. So that is what ICT taught. So you can decide to take profit from the beginning, and you can take profit even above here, but it's safer to get out as soon as you see price coming right at this level. All right, so we want to see price come back and get us in, and that is basically how this entry model works, and then you are in. That's how it works. All right, so you can actually see that price actually took out liquidity just above the body, and then it moved out. So that is why I said it is advisable you follow that. The same way you can do when you see price coming up, it has moved to that level, and then another shift in market structure right here. Let me show you. In the downside, it's basically a very simple way to enter trade, very simple and easy. Another shift in market structure right there. And then where is your breaker at this point? Because price actually pushed above this level. All right, so that is a breaker. And price move having this push down, the last sell candle at this level is your breaker. So price, notice how price pushed to just touch the tip, and then it started coming down again. All right, you're going to see this time and again. It's one of the easiest way to take institutional swing points, right? One of the easiest way. Let me show you this again. Price has been coming down after coming. We have another breaker here. Sometimes it's mitigation block. I wish I can see an example with a mitigation block. So this is another breaker. In a breaker, you don't need the body alone to close. Even the wick of the body, as soon as it is lower than the other side, you have a breaker. What I'm even seeing here is even this point. I am making a mistake. Look at this place. Price had the breaker right here, so this was the breaker. Let me show you. Coming here, coming up again, coming, and then shifted structure right here. All right, so that is your breaker, and this is your market structure shift happened here. Where is the market structure shift? Right there. All right, and where is your breaker? Your breaker is actually the bullish candle, this guy. You're going to mark it correctly. Did we have price coming to it? Price did not really come to it. Very close. I think price uses this bearish candle as a swing level, and then it moves up. It's not bad. Sometimes it happens like this. So this will happen time and again. You're going to see it. It will happen time and again. So always watch out the rhythm of the market and know where price is turning, and take advantage of that. As soon as you see a shift in structure, you take advantage of it. Look at this. Price has been coming up to this point. From here, have this coming down, another breaker. Breaker is a very powerful kind of institutional reference point that you can use. All right, look at this. Price has been coming from here to this level, coming down, having a breaker, crashing to this point. All right, anyway, price have that shifting market structure here, a shifting market structure here. And where is your breaker? Your breaker is basically this very big candlestick. All right, so when we have a very big candlestick as our breaker, we use half of it as our entry. Just the middle point is called the mean threshold. All right, this place as our entry when we have a very big breaker at this point. It's a very easy strategy to use, and that is where your entry should be. So look at price actually having this, I haven't printed this very huge candle with displacement. Our entry is going to be here, the mean threshold, and boom, we are in the market. And it moved again to another direction. Notice how price came to this area. Remember, liquidity is residing around those areas. All right, price will always give you this another breaker. Price coming, having this breaker, you can see coming back and retesting this breaker block. Such an easy way to trade in the market. Just follow what price is doing. Any place you see shifting structure, because there is shifting structure right above this level, right above that point. Shifting structure happens time and again. So it's easy and quiet, understandable. All right, easy and quiet, understandable to use this strategy for taking trades. All right, you have any question, let me know. I will always be there to answer your questions. Price moving up, having shifting structure here. A mitigation block has been noticed right here. This is the mitigation block for entry. As soon as we see price closing with this sell candle, price coming with the green candle and moving downward. All right, so this is quite understandable. Three most important things in this kind of entry. Number one, let's call it your time frame. All right, time frame. Then secondly is market structure shift. Thirdly is your institutional swing point, ISP. All right, so these are the three most important things in this kind of entry for you to have a perfect kind of entry. Your time frame should be either 4 hour or the 1 hour time frame as a beginner, and then secondly you should focus on market structure shift, and then thirdly you must focus on institutional swing points such as a breaker block, all right, and a mitigation block. So these are the things that you should focus on. All right guys, this is the only thing I wanted to share with you right now. I will keep on updating you with more valuable content. Make sure you subscribe to this YouTube channel. If you have any question, let me know in the comments. Thank you guys for watching. See you next time.